All right, no problem. Eva, thanks again for joining for the second time. We're fortunate to have you around here, and Ditch Digger fans, I know, are going to be blessed to have you on board as well. I think really just to get started, I'm just curious to understand sort of what your life has looked like since the beginning of COVID, and what sort of trends that you're starting to see with some of the clients that you're working with and some of your business partners.
Yeah, well, I think it's no secret to the listeners that essentials have been redefined and revalued. And as an investor in basic goods and services, I absolutely have seen that value increase in the interest in businesses providing healthcare, energy access, sanitation and waste services, agriculture tools, and financial inclusion, which are the 5 areas we invest in at Beyond Capital. I also just will speak from the perspective of being in the middle of a venture fundraise and doing that virtually. I actually think it's a boon to be able to connect with people virtually over Zoom and have the ability to foster a real connection, because I think we're all getting used to this. I've never met you, Robbie, or Gary before, but I feel that we also have an authentic connection. And so I think in general, I can only be grateful for this time. And, we're very busy. It's also brought a lot of important topics to the surface. And I think that our solutions will be lasting this time around. And I also have been able to engage a little bit more around topics like Black Lives Matter, and use some of my own channels to help amplify voices that maybe we weren't outwardly interacting with before. So those are 3 areas. And, my heart goes out to those who don't have as many silver linings as I do.
Yeah, no, appreciate that. And so when it comes to, I know like part of your fund is obviously on a global scale, or at least international, specific to Africa, I know for sure. So I guess I'm just interested to understand a bit more around the dynamic that you've seen. Has there been any shifts in terms of more of a globalization for solutions coming up, or have they really stayed specific to similar trends that you were already seeing pre-COVID?
Well, the market was never addressed. So we are investing in a 1 billion person market in India, Kenya, Rwanda, and Uganda. Markets that where low-income individuals lack access to basic goods and services. I think nothing has changed significantly around the innovations. I mean, I do believe there are some bubbles in ed tech in India, possibly even in agriculture in Africa, as we think about security and uncertainty and a flight to assets that make us secure. But we've seen, kind of similar level of deal flow, companies that have innovative solutions. 2 things I would just comment on that are slightly different in our thinking and the way we describe our work as well. One of them is we've always invested in people. And with the kind of focus on more stakeholders coming into light during the COVID pandemic, we really started to think a lot about, well, what are these people bringing to the table? And ultimately, what their value is being a conscious leader. And so a lot of our kind of process of going out and talking about our work at the moment for our raise, but also, doing the investment work every single week with the pipeline, deep in with the companies, has really shown us that what matters is conscious leadership, where a leader is thinking about more than herself and more than just shareholders, but also thinking about all stakeholders, including employees, customers, the government, communities, the environment, and in specific cases could get broader than that. So conscious leadership is one area. The second is kind of a global trend to solve for some of the lacking access that we have. And while the business models are relatively the same as what we've seen in the past, we do see greater interest, especially in India, for early stage companies. So we haven't seen that demand go away as we are an early stage funder. So it's not necessarily it doesn't impact our work so much, but in some cases you might say that there's a little bit of increased competition.
Yeah, that makes sense. And I think it's all absolutely warranted too. Like you were saying, if it's a billion person issue to solve right now, it's a large market, and it's an important market to ultimately help and solve for the future too. So going off the idea of the conscious leader, I know it's a big buzzword right now, and it's obviously top of mind just through my experience from LinkedIn as well. We went through Fred Kaufman's like conscious business, like a training for that for about a week, and we worked with Prakash Raman on it. Really start with the why. But I'm just curious, when you are going through these interviews, like what sorts of processes or frameworks do you use to really uncover someone who is authentically a conscious leader?
Yeah, I'm actually in the process of putting together a conscious leadership scorecard for our own due diligence process. But from my past investing experience, because I would say that my dozen portfolio companies in the first fund are all led by conscious leaders. I think the first and foremost sign of a conscious leader is kind of commitment to their mission, and understanding and a deep awareness that success in their mission will also drive financial performance. In other words, impact is baked into their business model. There are a lot of models out there that perhaps don't have impact inextricably linked, and therefore there are trade-offs. And that's where impact investing falls short of investor expectations. But I believe that if a company is conscious leadership driven, it will have the right formula of impact, not necessarily needing to have a trade-off. So showing that commitment comes through deep conversations in the due diligence process. It comes through reference checks. It comes through understanding who they are as people, and also, what motivates them. And so as much as we are doing due diligence on their financial projections and all of the hard-nosed stuff, we're also getting to know who they are. And then I think you can really easily start to see whether an entrepreneur is walking the talk. Let me give you an example. We were looking at a company that electrifies fleets of motorbikes in India. And out of nowhere, they had kind of a relationship in Midland, Texas, not too far from where I am, with an oil sands company to help electrify their fleet. In my opinion, working with a fossil fuel company when having a very big vision around electrification and the next generation of renewables is not congruous. And it piqued my interest. It kind of got me an orange flag or a yellow flag. What's interesting is that later on, as we continued our due diligence on the business, we learned that the CEO, one of the co-founders, was kind of not honest about using a family company as one of their suppliers. Their communication style was not respectful in the due diligence process. And we ultimately said, this is not the type of company we want to invest in. And I think if I were to distill that down to one reason, it is because it was not run by conscious leaders. It was run by individuals that see the pie as finite, that are grabbing all the business they can get, but ultimately not committed to their mission. And then, just one other quality I think of a conscious leader is that they truly do understand that their own leadership health and even their spiritual and mental health will play into how they show up at their work as a leader. And in working with an executive coach, I've always kind of been taught that. And I think we still do have an undertone in our culture of go, 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 be busy, busy, busy. But I know that I do my best work when I am taking care of myself. And I think that goes for everyone. And so conscious leaders, we've seen them in our portfolio come to us and say, we need an executive coach. we don't have it in the business budget. Are you willing to help us out? How can we work together to get the skills that we need? Or, just doing ad hoc kind of shoulder to cry on sessions with some portfolio companies, I think can help provide that space.
Yeah, yeah, absolutely. I'm a huge believer in mental and physical wellness, so I stand by that tenfold or 100-fold if you could. So through this process, like you mentioned, you're in the process of putting together a conscious leader scorecard. You also have now labeled out 2 very specific highlights that you look for in terms of the commitment to the mission, as well as a strong mental and overall well-being. I'm curious if that was a product of your first 12 investments, or was that something that you were thinking about ahead of time? In sort of how is that shaped through the process now of actually going out and looking for a second round of funding or capital raise?
Yeah. I mean, we were lucky to invest in impact-driven companies, I think, when they were allowed to be particularly mission-driven. Our first fund sat underneath a nonprofit structure strategically so that we could also assist in contributing more resources than just capital. But where we stand now, we are at a point of maturity in the industry where companies do need to be very clear about showing unit economics that add up. So I think we have learned a lot from the leaders in our portfolio. Now, as always, hindsight is 2020, and we likely may not have invested in some of the companies, probably more in our due diligence process earlier on, that we reviewed and considered. I think now they would be a hard and fast no, simply because we would have this muscle. And I've always said this as an investor, even when I was investing hundreds of millions of dollars of pension money into hedge funds, there is a sense that you have when you know that there is a commitment or there isn't. And then, of course, there are things that can quantify that. So yes, a lot of our thinking around conscious leadership now is absolutely drawn from our portfolio. I know that a lot of John Mackey's thinking around conscious leadership is drawn from his experiences in running and selling Whole Foods and now staying on as a CEO under Amazon. And so our view, and there are some great resources out there, including his book, but also the 15 Commitments of a Conscious Leader is also an excellent one that some of your readers might be interested in. And I think there are a number of perspectives and steps you can take to kind of be more concrete. But really, at this point, we've also learned a lot about the personality types that move to the countries or are born in the countries where we invest and what drives them. And we aim to kind of incorporate that in getting to know new entrepreneurs.
Yeah. And so for the listeners that are also still even further interested in understanding more about your business, can you help the listeners just with a little bit of insight into the capital raise that you went through, some of the processes that you felt like were uniquely positioned to you guys, and how that ultimately led to the success that you're starting to see, or you have seen through the successful raise?
Yeah. Well, we're still in the middle of the raise, but I think we've gotten to a point where we will final close with a really incredible group of limited partners. And I think of the world in networks in many ways, and I hope that they get to know one another, because I think it'll be a really incredible just kind of match of individuals. But when thinking about what are some of the core qualities of what we do, I mean, one is this kind of belief that conscious leadership will drive innovation around basic goods and services. The second is creating a diversified product that is multi-country and multi-strategy, so that it is turnkey for investors that want access to purpose-driven, impact-driven businesses in emerging markets. And we've done the research, for example, we used to invest in Tanzania, and we no longer will invest in Tanzania with our new fund based on lacking fundamentals. So we have truly done kind of the research to know and be comfortable that we are investing in the right markets to produce venture-like returns. And then I would say kind of the last is our track record, which extends to a financial exit in our first fund, a strong book value IRR impact of 7 million individuals with basic goods and services, as well as 5.2 million women. Our entire portfolio is known as 2X eligible, which is a framework for measuring how how companies and initiatives are empowering women in developing countries. We have 70% of our founders are female founders. So we also have impact themes such as gender distribution and livelihoods and mobility that overlay our portfolio. And so the results really stand for themselves. And so those are kind of the three areas. I think investors are also interested in funding a female fund manager who has a track record. And the way I like to say it is, if we want more representation from women and people of color in finance, we have to actually put money into their funds. And I feel really great about being the next generation of female fund manager. This is my next 10 years, at least, fund one. And I'm really excited. I don't lose sleep at night about our investment strategy. I think we've got a pretty strong foundation.
Absolutely. And Gary, do you want to add on to that?
No, I mean, it's really fun listening to you, Eva, as far as the way you think about these things. And when I look at what you're doing, I'm sure you've done a lot of due diligence. What's the when we talk about our foundation and giving back, and our Ravine Group Foundation being part of the culture of who we are in our businesses, we're confident that we have better production, better people, better relationships, and overall better culture than if we didn't have that foundation, right? Our businesses, our businesses serve, a certain couple of different industries, facilities and energy industry and all that. But and we think that we do a lot of good work in what we do, but our foundation definitely does things that are I think bring culture and people that care together a lot more than our businesses can even, right? So when I think about you look at profitability of companies that have conscious conscious leaders as well as teams. When you compare that, if you've done any, I'm sure you've done some due diligence maybe in comparing, what's the expectation? Do you expect it, some people would say, oh gosh, if you've got conscious leaders, conscious capitalist leaders, they're probably not going to make as much money as those that aren't, right? The profit's probably going to be as good. So maybe the expectation's lower. What's your feeling to all that?
That is not true. Not to contradict you right off the bat, but here are a couple data points.
Yeah, by the way, you're not contradicting me because I believe in it. I'm just saying that I know there's people that don't, right?
Absolutely. So it's important to have to be armed with the data. So since the Great Recession, up until the end of 2019, 15 of the 17 companies that went bankrupt that were listed on the exchanges and traded within the S&P 500 were lacking in ESG, environmental, social, and governance qualities. So that's kind of number one. There's a lot of media articles, studies that have come out since the beginning of 2020, but even before that, that says that ESG is now referred to as risk factors. So let me walk you through just kind of even high-level conceptual ideas for those who don't know necessarily what environmental, social, and governance criteria can be. I mean, first of all, there's the environment and even potential lawsuits. I mean, for example, like the BP oil spill is one great example of that. On the social side, you have companies that are not treating their employees well. There's a well-known hedge fund manager, I actually can't recall his name, but he has funded Just Capital. And Just Capital is a corporate tracker that tracks companies and how they're responding to the COVID crisis. And frankly, I think it's not going to stick with COVID. It's just starting as like a framework of how companies are behaving and kind of creating a value system around that. And then when it comes to governance, I think at the end of the day, what you see is we may not be there yet, but I think consumers will penalize companies that lack diversity. And so when we think about the risk factors of ESG, to me, those are important data points to integrate into a financial due diligence. And the numbers have shown that, especially with public market investing, companies that perform better beyond just shareholder expectations, beyond just the single bottom line, are more resilient. And you know, we all had to stomach a lot in 2020, and I think I would love to know that my portfolio was more resilient and not going to be shocked by some of those ESG factors. So that's how I would explain it. And the last thing I would just say is, in my own interviews with over 50 purpose-driven leaders in all industries, from commercial real estate to the largest Black-owned bank that's publicly traded on the NASDAQ stock exchange, to Left Coast Naturals, which makes hippie snacks sold in, you know, big Whole Foods. Yeah, well, a lot of people know about that brand. These are all companies that have been around for a long time, decades. Well, Left Coast Naturals started in the mid-90s, and it's been a purpose-driven company from day one. And so I think we need to also look at the examples that allow us to have a more emotional connection to our money. And when we can do that, the sky's the limit, in my opinion.
Sure. And when you look at purpose-driven through, like, you know, as you said, ESG, right? Is what you say. So when you look at that, how do you balance that? How do you weigh that out? Because I gotta believe there's, you know, some companies are very strong, and one of those, not
Sure.
maybe the other two, right, or 2 out of 3, let's say, or whatever. And you know, when there's a culture in place with, you know, of years of practice, hard to change some things, right? If somebody's super strong on one side, environmental, but, you know, they're just not that strong on the diversity side, that, you know, maybe they're trying to get there, but they're not close, right? How do you look at that?
I don't think they should be penalized. You know, we shouldn't let perfect be the enemy of good. And I think it's important to know that this is a process, and success is always a process. But it's very important to define your values. So that's why defining your values is so critical. So we 3 here on this call could care about 3 different issue areas or topics, and that is okay. So we all might decide to invest in companies with different weightings of the E, the S, and the G. And we're going to live in that world for a while, I think, probably for the next couple decades. I do think in the next 5 years, ESG screening, also known as SRI, socially responsible investing, will be mainstream. We've already had some large banks say that they will show them as default to their clients in their private banking segments. And so, and you know, lower dollar amount investors have plenty of access to ESG. So that will change. But I do think getting a company to be, you know, 100% aware of all of its stakeholders, it will take time. It unfortunately might take a lot of situations that we as humans have to go through to make sure to shed light on the fact that they are important. I think one of the silver linings of COVID is that it has shown that all stakeholders matter. And so we luckily, I mean, for better, for much worse, but for better, we've got to accelerate a little bit of this thinking. And I think companies will do better going forward.
Awesome. No, I agree with a lot of that. I mean, and so when you're looking today, you know, your fund is how much invested so far? Are you 75% of the way there, 50% of the way there?
My first fund is almost fully invested. It's evergreen, so we have the opportunity to continue to invest. The second fund, we are closing our first close likely at the end of January. And so we'll hit the ground running, but we already have strong pipeline. So we would allocate about $2.4 million in the first year.
Are you finding that
stage deals?
Are you finding that, like, in 2020, one thing you have is an advantage of understanding businesses that are even more recession proof, maybe? I mean, when I look at 2020, if you're investing in businesses now, boy, if they're doing okay now, right, growing now, you know, just a great indication that they're more recession proof maybe than what you may have thought before, right?
Absolutely. We've seen a lot of resilience in our current portfolio, and it has 100% informed our investment strategy going forward. You are so on point with that. And frankly, I think the vintage of my fund is going to be incredible starting out in 2021. I think, you know, I could not have timed this, and I think all the tragedy was definitely not worth it, and we're still living through it. But we do have more discernment around what sectors are critical, where maybe we wanted to de-emphasize a little bit. We've made some small changes within our sector focus. And actually one area where we are adding what we would call an impact theme, but it could also be viewed as a subsector, is thinking about mobility within the sectors that we invest in. So healthcare mobility, and we just funded a drone healthcare delivery business. But also thinking about, you know, mobility within agriculture. So how do you create food? Sometimes agriculture is for other purposes, but, you know, create food using perhaps means that are more technological, or even, you know, find ways to use mobility or sky mobility like drones to make the process of growing and even transporting food more efficient.
Sure. Yeah, that's fun. That's fun stuff when you can be, you know, thinking of the future and understanding, you know, where things are going, and then investing in a way that you're finding the right leadership, the right social responsible companies that can hopefully lead in those fronts, right? Pretty cool.
The word fun, I think, is totally underrated in our world of business and investing. I think we all want to feel good at the end of the day. Mm-hmm. And what I love about my work is that I do get to enjoy the purpose that comes along with it.
Cool. Yeah, you're very blessed, and it's people are blessed that you're part of their team as you do go forward, because your network that you're growing, like you're saying, is one that you're going to be able to really leverage, in my opinion, right? The network of leaders across all these different industries, right? That could network with each other, that can learn from each other, could be incredible. If you know, I'm sure you're really thinking about how you're going to use that for the best interest of all, right?
Yeah, there are a lot of connections that can be made, and I think there's a lot of work to be done into the future. And I also believe that some of these entrepreneurs will exit their companies and do really fascinating things afterwards. So being able to be a part of being one of their early funders of their business is like, it's a way for them to want to stay in touch with you.
Absolutely. Yeah. You're going to help them scale, and that in a way, hopefully they didn't know they could, right? And create value and enterprise value, and you know, have fun while you're doing it, and have fun when it's done. And they'll probably be future investors in your future funds, and board members maybe, right?
Absolutely.
It should be awesome. You know, it's a circle of business, right? Sure. And that's really cool. Awesome. What else you got, Robbie, for this this leader of leaders that we have on with us?
Yeah, absolutely. The first thing that comes to mind, honestly, is you had mentioned that the fund that you're raising right now, you have a 10-year vision. So I'm curious, if we look into, I guess, 2030 at this point, and we're looking back on the last 10 years, what does success look like?
Yeah, it looks like a thriving portfolio of 18 to 21 investments that have been exited. And, you know, we don't believe in what we would call the spray and pray model of venture investing, where we invest in, let's say, 10 companies for the sake of being round, and have, you know, a 10x, a few doubles and singles, and then losses being subsidized by the winners. We expect a more consistent band in the mid-single digits across our portfolio. And so, but we know, based on our prior track record, that every dollar we invest impacts 17 lives. And so I think the fascinating part of the impact that we will have is reaching 250 million people.
Wow.
Fantastic. And something I've noticed really commonly with leaders, I feel like, who are thinking as far out into the future as you are, is that they have a long-term vision that's more intrinsic to themselves. And they want to make sure that as they're progressing through their career, that they're aligning with that. So I'm interested in, come retirement time, what does success look like, and what is your vision that you're trying to accomplish or ultimately fulfill?
Yeah, you know, what I'm here to do is serve. I grew up in a family that served, living in Africa and American politics, working in the Office of Economic Development after World War II. And I really believe that that is the purpose of my work. Now, I'm super excited about that drone company, and I cannot wait to look back and see what the multiple on the exit is, because I think it's going to be incredible. So I don't want you to think that, you know, I'm kind of motivated only by one side. I think it really all comes together. So it's not only the fund. As you know, we've built a brand around our fund, because we know there are a lot of people that want to talk about impact investing or hear about it or learn about it, that don't necessarily have a background in finance or have a $50 million portfolio where they can access some of these elite networks that, you know, give them deal flow. They simply just want to know how to contribute beyond themselves. And so I think that you will see that some of those, the online magazine continues to kind of speak more widely. It grows its following. It's called The Conscious Investor. And to me, that would also be a way to have additional, you know, what I would view to be success, because through that we share stories that, you know, we can't invest in. For example, maybe currently, and though I think our model is translatable to the US, but currently, you know, entrepreneurs in the US that are doing really interesting purpose-driven work, we're not investing in that. So we share their stories through our online magazine. And I think, you know, I don't think I'll ever be an entrepreneur myself, because I view myself as an entrepreneur, meaning like starting a business like in the countries where I'm investing in. I think that I like this side of it, being an investor. I think I will continue though to be entrepreneurial in the expansion of the work that I do, and hopefully always trying to push the envelope.
Awesome. So Robbie, we've got it and top of the hour, right? You got to go top of the hour. So you want to finish up with what you've got out of this round?
Yeah, absolutely. So I have 3 takeaways this time. The first takeaway that we got was, it's probably pretty apparent, but focusing on conscious leaders, but more specifically, focusing on individuals that are intrinsically motivated to solve something bigger than themselves. And I think along with that, like you were mentioning, it's particularly a balance between really fostering the best individual that they can in themselves through mental and physical well-being, but also making sure that they're focusing on the bigger picture. And I think it is really important, because you don't want to have success in one at the sacrifice of another, because then ultimately you just don't perform at the top level that you can. So I liked how it was that you had baked it down into just 2 simple takeaways in terms of a conscious leader, like 2 bullet points to look for, because I think the more that you clutter it up or add 5 or 6 bullet points, it becomes more difficult to realize. So the first one was focused on becoming a conscious leader. The second is really in line with the network of individuals that you surround yourself with, and making sure that ultimately those individuals are aligned with the mission that you're trying to accomplish. And I think that there's sometimes networking gets a little bit misconstrued in the sense that it's just meeting people for the sake of meeting people, but making sure that, especially in this case, that you have an individual that is aligned with your vision, both personally and professionally. And then making sure that through that process, you can use their networks as a catalyst for ultimately achieving that mission. And the last one is more really like holistic or macro, if you will, or abstract, is that I just believe that the takeaway for our listeners today is that, like, as a part of humanity, that I think we have a responsibility for our current generation as well as future generations to really build businesses centered around a triple bottom line and impacting the world as a whole, both socially and economically.
Absolutely. And it doesn't have to mean that you're trading off financial profit or return or ownership structure or any of the things that people who have a proclivity to think that they have to give up, you know, success think. The pie is not finite. That's what it comes down to.
I like that a lot, really. Even when I think about it, you know, we have tried to educate other people, and you know, starting in our businesses, it's like starting a foundation that you can give back to the things you believe in the most, your team believes in the most, whatever those causes are for your community, to uplift your community and all that. And we've had a lot of fun with it. And for us, you know, we're in an old kind of old industries. We do have a pretty cool drone company that I think I may have told you about before. It's really fun. Mm-hmm. We got robots we put under the ground. That's a fun technology business as well. But overall, like a lot of businesses are old school businesses, and you know, we can do some really cool stuff there. Like, you know, we definitely consider the environment, everything we do. You know, we definitely consider, you know, who we hire and how we make sure we have diversity of mind and everything else. When we look at social issues, you know, our foundation really does a lot on that side. That really helps. But I'm confident that our profits are better because we do these things. I'm confident that our team members, our culture is better because of these things. And I'd love to see if there's a way, you know, we can get something out there that kind of that has really kind of really good data that we can get out to our business friends across the globe to say, hey, check this out, right? You know, some people don't believe that it can have that much value, and I believe, like you, that it can. If there's data out there, we can show people that, hey, if you're socially responsible, this could be the benefit of if you're not planning on more profits, even they may come by being more engaged with community and you know, government and all the things you talk about. So I think that's the coolest part of it all, right? You think about, hey, we want to do good things because we live on this earth one time. And we want to make sure it's a better place when we leave, right? But even better yet, gosh, you can even do more than that because you make more profits because of it. You can serve more people because of it. So that's really cool.
Yeah, I can send you over a war chest of articles that I have around ESG performance. It's for investors, but maybe it's a good starting point, and then we can point listeners to the B Corporation movement as well, which I think has some great examples.
That'd be awesome. Cool. Well, hey, great seeing you again, Cal. Really appreciate everything you do, and let's get together soon, okay?
Thank you both. Thank you, Robbie. Thank you, Gary. Have an incredible holiday season.